long calendar on QQQ. So I call it a kind of a target trade. So with this trade, the idea behind the trade was to target a certain area of support for what we call pinning, and then if it broke that support, we had the flexibility to adjust it to a long put calendar. So let's take a look. I'll kind of walk you through the trade here real quick. So this trade alert was set out right at the end of the day on Friday. So QQQ was starting to break support. So it was trading around 303.50. And so there was a momentum was starting to fade. We had that cycle high retracement reversal looking at that. So set this up, and the reason this was set up again was targeting a certain key point that was support for like potentially where it could go out. Now, if it broke the support, we were looking for a potential bigger move down so that we can adjust it. So with this, went out and bought the 22 Feb, sold against it the 17 Feb. That was Friday's expiration, the 300 put at $1.20. So we got a big flush then yesterday. All day long, it was sitting right around 300. So went ahead, took some profits there, adjusted part of it, but then at the end of the day, closed it all out. But this trade was up, really had a really good profit during the day because it was kind of established initially for a pin trade where we thought it could go out based on this key area of support, which was coming in right at 300. So we had momentum down, cycle reversal, so set the trade up on a Thursday, trade at 303.50, and then the next day on Friday, this thing traded down below 300 actually, but at 300, I took some profits here. So at that point, 300 or 301, this trade was up $95, $96 per spread based on this calendar. So the risk was $120. It's a positive theta type trade, which we wanted. And it's what I call kind of a target pinning trade. So this was up $96 or, 80% return over a 1 day period. So let me pull the chart up and I'll show you more on that trade and why it was done this way. All right, so with QQQ, the area that was really standing out was this right here. See that dash line? That's the prior week's close. So that was coming in right there at 300. Now at that level, there's a huge amount of option activity that was going on all, the whole past month. So that was the target. So 300. So the calendar is a great way to target something to take advantage of, that theta decay and volatility coming out. So the calendar is also one that we were thinking, okay, this looks poised to maybe break, and we could have a bigger move down to maybe 295 or even down to 292. So with this type of trade, we can adjust it. We still had time to adjust it at counter diagonal for a bigger move lower. Now the price action at the end of the day started going out pretty solid across the board, with QQQ. But if you looked at, the Russell was going positive. I'm just kind of walking you through the thought process. So the Russell here was going positive. You can see it was going back up here. It was closed up, and then the Dow was, going positive, et cetera. So that I was looking for more, momentum price action down versus up. So we went and just took the balance of the profit and closed the trade out. But that's a kind of a summary of, what kind of the process of going through and kind of matching the chart pattern with a specific, option strategy.